The usual suspects are dropping today on the tariff talk.
Yeah.
You know, inevitably we have to ask, do they become buying opportunities as a result?
Look, I'm still pretty cautious. I mean, I think, and Liz Ann Saunders and I have spent the last couple of months, we've been going around the country at different venues talking about this late cycle behavior that's taking place both in the markets and in the economy. And you see it in the flattening of the yield curve. You see it in the behavior of economically sensitive commodities like copper, which is coming back down. You see it in the behavior of the market. So, I think we're heading towards a slowdown in the U.S., and it's already happening outside the U.S. You know, we're outperforming the rest of the world. Europe and China are both slowing down.
Even with the Atlanta Fed's guesstimate on second quarter at 4.8% right now.
Yeah, but that's 3.3% year-over-year growth. So when you're looking at the actual rate of growth, it's still very good. But we had 4 of those during the Obama years where we had better than 4% quarterly economic growth annualized. And so it doesn't mean that your entire average yearly rate will top 3 or 4%. It means you might get a bounce back from a weaker than expected first quarter. So I'm still a little cautious. I think, people need to be a bit prudent around these levels.
Doesn't it help, David Spika, that, I mean, to Ron's point, in terms of the U.S. showing growth and other parts of the world showing a slowdown, doesn't that in and of itself help U.S. stocks? I mean, on a relative basis, this looks like the place to be.
Well, it's certainly helping small cap stocks. It's helping stocks that have more domestic exposure. It's not helping industrials or global stocks, I guess, outside of the big tech names. I think one of the things to recognize is not only is the market reacting to fears about trade policy and the potential impact that could have on the economy, but this is coming in the midst of significant monetary policy tightening. And we've been through a historic period of significant monetary easing. The Fed's now tightening. We see the ECB is going to begin tightening. We've never seen this before. And I think that underlies everything else that's going on is investors are thinking, okay, we've got potential economic slowdowns. We're seeing it in Europe. Trade policy could impact that here. And at the same time, we're having the Fed tighten monetary policy to an extent that we haven't seen before because we've never been in this period of such stimulus.
Which raises the question about inflation and just how bad is it and how fast is it climbing here, Ron? I pulled out 2 areas where we're already starting to see the tariffs drive up the cost of products for American consumers. I mean, there's a lot of hand-wringing about this, but it's actually happening in the CPI numbers. If you look at appliances and you look at washing machines, 2 places where there have been tariffs, you see the chart. I mean, it ticks up. These are not big in terms of their weight on the overall consumer price index. They're small pockets. They're shades of tariff impact. But I just wonder, as this thing continues to spiral, as more countries start to retaliate and as we start to retaliate back, how far this can go.
Well, listen, I mean, I think it's maybe the single biggest risk out there right now from a policy perspective. And then right behind that is the Fed raising rates one too many times in an environment that's pretty late stage. And so, yes, those particular areas of inflation are small within the CPI, but rate of change matters. And you're also seeing, anecdotally anyway, wage inflation that the Fed's ultimately going to respond to, even if they don't see it in the statistics right now. All the anecdotes talk about 100% bonuses, all sorts of incentives to get people to go into different jobs. And that's going to show up eventually in the data as well.
So, David, if you want to de-risk your portfolio at this point, what do you look at? Because you had mentioned small caps. They're doing well, but they're also close to record highs at this point. So is there value there?
Well, I don't think you bail out of equities. Clearly not. I mean, there's still reasons to own equities, particularly here in the U.S. I think you look at strategies that protect against higher volatility, low vol equity strategies, or potentially liquid alternative strategies that are designed to perform better in volatile environments. I think this is potentially an inflection point. We're 9 years into the cycle, as Ron was noting, and it's potentially an inflection point, but we don't know how long this is going to last. My gosh, look where we've been just since the election in 2016. And so it's important to be well diversified, but look at strategies that can participate in the upside while still mitigating that volatility that's likely to pick up.
Are you talking about risk parity strategies, David?
No, I'm not talking about risk parity per se. I think for the average viewer, risk parity is something that's probably a little bit too sophisticated. But there are a lot of liquid strategies that you can buy that are mutual funds that are easy to understand strategies for the most part that help manage vol. I mean, low volatility equity strategies have grown in popularity for good reason. We're at high valuations, volatility is picking up, and there are strategies designed to participate in the upside without capturing all of that downside.
I think there might be an easier way to do this, which is to rebalance your portfolio and raise a little cash without taking the risk of with all due respect to David, a low vol strategy. Some of those have not worked as they were intended to. Yeah. One real quick thing, I'd also be watching emerging markets because those currencies are getting hammered and there's contagion risk there as well.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.